Welcome to today's video technical update presented by FX Times. It is Thursday, January 28th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex market. Today we'll follow up on the Euro-Dollar pair and the Pound-Dollar pairs. We'll also take a look at the Euro-Pound pair. This video is being produced at around 5 p.m. Eastern Time at the close of the US session. The Euro-Dollar is poised to continue this decline to our target at 1.3738 here, near the 50% retracement of this rally here. So right now it's continuing that, and there's been 3 straight days of decline, so it looks like a healthy decline. The momentum indicator is showing instead of crossing back over to the out of this oversold area, it pretty much crossed back and reached further oversold area, a sign of continuation and further bearish momentum. Okay, looking at the 4-hour time frame, here we had our previous low here near 1.4050 broken, and today, although the market seems very it's struggling to decline, so there might be some short-term rally. As you can see, we have a bearish divergence forming. That is, if the market is able to turn. So if the market here in the Asian session has any bullish push, that would show a bullish divergence, and we may have a little bit of a correction before heading further to the 1.3837 area. As mentioned earlier in the week, the pound dollar is not as weak as the euro dollar. Instead of declining, it's pretty much in a ranging action this week. So this is the daily time frame, and we see that this ranging action is between about 1.6050 to 1.63. Okay. Now looking at the 4-hour time frame, well, first back to the daily, we see this little knee here, because this shows that the market is ready to continue the bearish mode. So you see here was the first sign of reversal, which was given by these reversal price action. Then this consolidation is shown, and then the momentum also showed a little pause here, but now it looks like it's ready to continue. So there's a lot of bearish bias even though it's ranging mode. Looking at the 4-hour time frame, you can see that the price action on the decline has been more aggressive. The rally has been in 2 swings, while the decline has been sort of like a 1-swing decline. So, but still, we need to see a clear break before establishing either the bullish or the bearish case. The bearish case, if it breaks the 1.61 area, 1.6050 area here, the market may come back down here to 1.58, 1.59 I mean, over here. So okay, so this is 1.5850 to 1.59 area. Going back to the daily, that's this area here, and it will be a swing projection here. Now you also should notice that this is basically a congestion pattern within a larger ranging mode. So if there's a break above this recent range, there might be still resistance coming from this declining trend line. So here, if it breaks above, you might still have this declining trend line resistance somewhere here. Or let's just say for the short term, this top here would still offer some kind of resistance. After that breaks, then we could start talking about the possibility of testing this previous high here near 1.7. Okay, so basically ranging mode, wait for the breakout. There seems to be a bearish bias. Moving on now to the euro-pound pair. Just to recap, we had a break here of the long-term moving average and pretty much support here around 0.88, 88.50. After that broke, we pretty much have confirmed. This is one confirmation of the decline, as it attempted to retest this previous support and establish as resistance. The market continues without any major correction so far, But the momentum here seems to be showing a bullish divergence if indeed there is a bullish candle, like for example tomorrow. Then this would be a possible double bottom, and we may have another attempt to come back up to this zone. Here you see we are in a channel, so this is the support of the channel, and it's also 78.6% retracement of this rally. So there's some support here, and we may see a short-term rally, but that rally should be treated as a correction rally in the light of this bearish mode. Looking at the 4-hour time frame, you see a completed butterfly here, bullish butterfly. So that adds to the case that we may have some short-term rally in the Asian, maybe European session. You see the stochastic turning up, and that rally we may want to trace it to a specific Fibonacci level. For example, there seems like there should be a lot of resistance here at 0.8850, 0.88. As it comes up, it should meet this 200 period moving average here. Back to the daily, that 88 area is pretty much going to be this area, which is also here going to test its long-term and intermediate-term trend lines, and this is coincident to, or it will be near the declining trend line here, declining resistance here. So anticipate possible rally, but the more important thing is whether there could be topping action here near 0.88, 88.50, and from that, if there is, the decline is more probable than a rally. Okay. Basically, we are in a decline, so the rallies that we see should have very conservative outlooks, while the declines may be a little more liberal because we're in a bearish mode. That wraps it up for today. Visit fxtimes.com for more fundamental and technical updates, as well as educational live events. Once again, I'm Fan Yang, your technical analyst here at FX Times, wishing you good trading.